Warm welcome. Thanks for joining the webinar 101 Trading Ideas with Henry Carstens. This is a QuantiX webinar. My name is Dirk Roth. I work for QuantiX. So I think that most of you already use QuantiX as a framework, or at least know a little bit about it. So I will keep it short and sweet. Just give you a rough idea of what QuantiX is about. This should take us, I guess, 5 to 10 minutes max. And then I will hand over to Henry Carstens, and he will tell you a little bit about the creation of trading ideas. So let's get started. So QuantiX is the first marketplace for trading algorithms. QuantiX connects crowdsourced trading algorithms to capital from institutional investors. So that is what we do. We're kind of a platform connecting these two sides. So we have two customers, basically, or two users. The quants, you can use free financial data and backtesting software. And if you come up with something and you think, oh, wow, okay, I want to monetize that, you can upload it to our platform. Your code remains always your IP, so it remains a black box, and it remains your IP. That's important. And you pocket a cut of the profits. More about that in a couple of seconds. So the investor side, the investors, they get many uncorrelated, because you all have different backgrounds. They get many uncorrelated trading algorithms with proven track records. We provide these track records, the live track records. And they also get a fully managed solution to complement their existing portfolios. So the business model is pretty straightforward, and it's kind of similar to the industry, slightly different. Many of you might be familiar with a 22. So 20% of the profits and 2% management fee. So we waive the 2% management fee, but we keep the 20% of the profits and share this 50-50 between QuantiX and the quant. 80% of the profits go to the investor because he or she bears the entire risk. So the financial risk is not with the quant. That's important. And so yeah, I mentioned the no management fee for investors. So our interests are perfectly aligned. So we only make money if the strategy makes money. And that's true for all three parties. So we focus on institutional clients because we focus on fast-growing assets under management. So minimum investment into a strategy is 1 million. And we offer fully managed solutions. So we take care of the many regulations, legal parts, and the trading operation. Now and then, we host competitions. In the meanwhile, it's the biggest algorithmic trading competition with 2.25 million investments. So there you can compete, and you get investments in your strategy. So the top strategies get investments of 1 million, 750K, and 500K. Currently, Q6 is running. Just in a nutshell, how it works, because your backtest should reflect the live performance. We're looking at both. So there is a submission deadline. Submit your trading algorithm before August. So the deadline is July 31st. And this is your first part. So the first Sharpe ratio of the total final score is your backtest. And then we take all systems and evaluate them on live data, so on new data, for 3 months. That's the second Sharpe ratio, the live Sharpe ratio. And this makes, the lower of the two makes your final score. So people asked us before, okay, how do I submit? It's super straightforward, very simple. In Python, you can do it via the toolbox. The toolbox is the free and open source backtesting framework, or the backtester we provide. it's 2 lines of code in Python. Import the QuantiX toolbox, and then just use the function submit and the path to your system, and then, of course, the name for your trading system. And kind of similar in MATLAB and Octave, also there with a toolbox and the search path, and you just run submit my trading system dot file extension and then the system name. Or you, even simpler, you use the website, just upload it via the website. That's possible too. And now I would like to introduce, and I have the pleasure to introduce, Henry Carstens. He just wrote a book, and he has more than 20 years as a quant experience in strategy development and portfolio management, and also as a proprietary trader. He has degrees in mathematics, economics, and physics. And as I just mentioned, he wrote a book. And that's really great timing, because we just launched Q6, and he just published his new book with a lot of trading ideas. And quite often we hear, especially from people who are really good at coding, like, okay, so what are the things that I could just try? So give me something, and something I can play with, a couple of preliminary ideas I can build on. And Henry, he put together a lot of really amazing ideas. At QuantiX, we all read this book, and we thought right away, okay, that's a perfect fit. So let's make that happen, and I hope you're going to enjoy it. I'm sure you will. We put just, I think, 2 or 3 strategies we put in code already for you. It's on GitHub, so github.com/QuantiX. You can look it up afterwards. And now I will hand over to Henry.
All right, thank you. Thank you very much. So what I want to, so as Dirk said, I wrote a book. And that probably makes you cringe, but the book was on how to create trading ideas. And what's going to win the QuantiX competition, or what's going to make you a career as a quant, or further your career as a quant, is ideas. That's just all there is to it. It really is all about ideas. Of course, it's a lot about process and executing the ideas, but you got to have something to execute. So here's a little bit about the QuantiX competition, which you've already heard. And here's my intro to me. Ideas. It really is all about ideas. And what I came up with when I was working on a problem for a hedge fund was a way to generate trading ideas. And my friend Brett, people call him Dr. Brett, I guess. Many of you probably heard of him. The most neglected area of development among traders is creativity. We focus on executing trades and managing risk, but rarely work on expanding our creative capacity to generate ideas. And Brett has been sort of a 20-year mentor for me now, and he's always pushed continuous improvement and ideas. And so what I'm going to show you tonight is how to create unique trading ideas. And then afterwards, I'll answer any questions you might have. So this is me, blah, blah, blah. You already heard. The big deal, the 101 trading ideas, a magical list for fast-paced alpha hunting. So to win the Q6 competition, you're going to need ideas. I'm going to show you how to do ideas. So this is the way that your sort of idea generation process will work. You're going to have an idea, you'll turn it into a strategy, you'll turn the strategy into rules, you'll test the rules, you'll see if you've got any alpha, and you'll submit it to QuantiX, to the competition, or you'll use it in your own work, whatever you want to do. But it's the same, this idea hunt is kind of a process. Going to the first idea, the first part of that, how do you get the ideas? And the way to get good ideas is to get lots of ideas and throw the bad ones away. And this gets back to my idea about the list, where ideas turn out to be a lot like the old-fashioned game of telephone, where you hear, I say one thing and you hear something a little different based on your experience and your background and what you've worked on and what you're interested in. So a really fun thing, it turns out, because of the game of telephone, what a really fun thing to do is if you have a list and you scan down it, when you find yourself pausing, that turns out to be an idea, right? So if you take a list, it can be my list, it can be any list, and I'll give you another great list at the end of this. But as you scan down a list, you say, "Gosh, I've been thinking a lot about crude oil," and you scan down a list, and you might come to, one of the things in my list is trade the path to the outcome. So you're thinking about crude oil, and you come up with something. You read trade the path to the outcome. You think, well, I wonder what that means. What happens to crude oil if it moves a lot? And that's going to be one of the strategies we look at. It turns out that that actually is a really good idea. So what I want to do, hang on just 1 second, is I'm going to show you some ideas here. But another thing I wanted to, another idea is from the list is if I say something like trade an orbit, you might think an orbit. The tails on candlesticks look a little bit like electrons changing their orbitals, if you're a chemistry person. And it turns out that you can trade the tails of candlesticks, not the candlesticks themselves, but the actual tail, because it represents an energy state. And what happens after big tails is really interesting. All right, so the idea of using a list is the list ideas trigger ideas that are specific to you. They're impersonal in the list, and they become rich, robust personal ideas because they're based on what you hear, which is filtered through your experience and what you're working on. So your unique knowledge, your experience, your intuition. The list, my list, any list can be used by anyone. Novice, veteran, if you're brand new to this, you can still use a list and it'll help you create a lot of ideas, which is really hard when you're getting started because you're like, I don't really know. And then when you're like, when you've done this for a long time and you're like me, you can get stuck because you've done the same thing for so long, you get into a rut and you need something to bump you out. And a list of ideas, a big list of ideas that you can scan down that'll let you trigger, that will trigger things for you where you can jump off and do your experiments and you can hunt for alpha is spectacular. So when I came up with this idea for a list, I'd been working on a problem to create a trading system for a hedge fund in crude oil, and I couldn't solve. I thought, yeah, piece of cake. I'll get this. I'll get right back to you guys. Well, I never found anything. 1 year goes by, I still haven't found anything, and now it bugs me, right? Because I don't really have answers or ideas. So we get 2 years in, I haven't figured this out, right? I got a fund that asked me something I couldn't answer, and I'm embarrassed. So one day I sit down and I write out, I'm like, I'm doing this wrong. I'm just doing all my same old S&P tricks, my same old bond tricks. I'm trying to apply them to crude oil. It's not working. I need a new approach. And I sit down and I write this list of 100+ ideas. And then things start to happen. Scan down the list, get an idea. What happens when there's a big, what trade paths to the outcome? What happens when there's a big move in crude oil? Well, it turns out that's a pretty good system. In the book, there are 17 systems like that where I took after I developed the list, I took a couple weeks and just wrote trading systems. There's 17 fully disclosed strategies in the book. They're all alpha, they all full of alpha. You'll see some examples of them here in a minute. Here is an example of the list. This is the first 10 ideas on the list. You can see that putting 100 out there would take forever, but so some ideas: trade the path to the outcome, trade a relationship, trade randomness. So what you're doing is you ask yourself a question, hey, I wonder what's going to happen with the S&Ps. And you think trade paths to the outcome, trade a relationship, trade randomness. Ooh, randomness, British exit randomness. We're bouncing around pretty good here tonight. Maybe there's something there. Anyway, as you scan down the list, if you have an idea, trade an orbital or an orbit, there's the candlestick idea. You'll see trade a relationship. You're going to see some bonds and copper stuff come in. Convert prices. You're going to see, hey, what happens if we trade copper when we price it in crude oil and copper when we price it in gold, and those prices move differently? So you scan down the list, you wait for a pause, then you go test your idea. And you're going to, the QuantiX people have been spectacular in coding some of those up for you, so you even have a jump start on some code. And then, like I said, in my book, there are all the rules are fully disclosed. So let's go through this process real quick of list idea strategy. So this is the way I do it. And I say, I'm working on crude oil, and I say, okay, I need to solve my crude oil problem. And I read down the list and I see trade the path to the outcome. And the idea that gets triggered for me is, hey, what happens after a big move? And here's a strategy that trades crude oil after a big move. These are the results from 2006 to 2015. And you can see that works pretty well. And these are the rules are here. Let me do the idea behind it. The idea, the idea behind this is, after a big move, does crude oil circle back around to where it started, or does it continue on? Is it reversion or momentum? Will the future path be a circle, reversion, or a line, momentum? It turns out that it's momentum. So this system, this strategy is, if the close of crude oil today is greater than it was 9 days ago plus 5 standard deviations, and I hold for 20 days, what happens? Okay. So let's look at another one. Okay, so here's the candlestick one. Here's list idea strategy again. We read down the list and we say, it says trade an orbit. The triggered idea might be, hey, what does the tail of a candlestick mean? And this strategy here trades the tail of a candlestick in natural gas. And it basically says, hey, what happens if I see a tail of a candlestick that is a standard deviation long? And it turns out that if you buy and hold for tomorrow, you get a little bit of reversion. But this candlestick, this idea of trading the tails of candlesticks, this is all the strategies I'm showing you now are all based on daily data. But this one is you can move it up or down. So it can be on weekly data or monthly, or it can be on minute data. This is a really interesting strategy to move around. In the book, you'll see with each of these 17 strategies, what you're going to see is that there are next steps that will help you improve the idea and move it to another, or give you some ideas on moving it to another stage. So here's another idea, list idea strategy again. You scan down the list, you pause, you set trade tomorrow, and you're like, I wonder what the short-term relationship between gold and the 30-year bond is. And this is a one-day strategy that says that there's going to be some reversion there. Gold is both a commodity and a risk vehicle. So when gold and the bond move in opposite directions, the move sets up a reversion in gold on the following day. That's a pretty interesting equity curve. There's a little dip there, but it's interesting and might be able to do something with that. Okay, here's another list idea strategy. So you're reading down the list and you get to convert prices and you think, that's interesting. I wonder what the relationship of the price of copper in gold and the price of copper in crude oil is. What this strategy does is trade copper priced in gold and copper priced in crude. And look at the equity curve. Oh, it's beautiful. It's just a beautiful thing. I haven't tested this as fractal, but I'm sure this works on I would guess, I'm sure. Nobody's sure in this business, but I would guess this would be worth looking at on on both longer term and shorter term data. Okay. So here's another one. This is one that's been coded up for by QuantiX for you. So you can find it. I'll give you a link here at the end of this. But this one, you're scanning down the list and you see find the signal, and the triggered idea might be, how do traders position for the weekly petroleum status report when the prior report created more noise than signal? And this strategy trades crude oil, but signal and noise apply to all markets. So the rules for this are, if it's Monday and the close of crude oil is less than yesterday's close, and the range of the last 4 closes is less than the average true range of the last 4 days, then buy crude oil and exit tomorrow. And the reason you're doing this really quick, this is why this is a one-day strategy, is because you want to get away, you want to get out before the signal hits when the next petroleum status report comes out, which has the chance of turning noise into a signal, and you don't want to be trading noise when a signal comes out. Sort of like the British exit thing right now. I know, it's an obsession. Okay, last one. This happens to be my favorite idea of all of them. The list says Pantheon. Okay, Pantheon of gods. A triggered idea. If crude oil and natural gas are viewed as old world gods, what does a fight between them look like? So, fight is represented by crude oil and natural gas going in opposite directions. Extreme prices denote the climax of the fight, and declining volatility is a sign the gods are getting tired. So look, this is a really interesting idea, and what's interesting about it is that probably not a lot of people have had this. This is just a way to, what you'll find, and I'm sure you've found, is that the more derivative your idea is, the more off the beaten path is, the better the returns are, and the better it holds up in out of sample testing. So strategies that the way we build strategies, the way we tend to build strategies is we do like we do here. We have an idea and we go code it up and we check the historical returns. And when we code it up, we essentially lock that strategy, that idea, into historical data. And that means when the market changes, and the markets are always changing, when the market changes, our strategy is stuck. So one of the really interesting things to think about, and this is sort of another idea on a different plane. So this is, remember Dirk said that the way the strategy is, we're going to look at your Sharpe ratio of your back test, and we're going to look at the Sharpe ratio of your out of sample test, and we're going to take the lower of the two. It's really important to use as few rules as possible and as unique a rules as possible in order to make that happen. The fewer rules you use, the less chance you will have of curve fitting your strategy. And the more derivative the idea, like this Pantheon one, the better the odds are that fewer people have found it. And fewer people having found an idea means that you're going to have less decay when it goes out of sample and the markets are changing underneath it. Okay, so here are 17 starter strategies from the book. You'll see there's 4 crude oil strategies, 4 natural gas strategies, 4 copper, 5 copper strategies. The copper strategies are really interesting, and 4 gold strategies. They have some nice profitable years. Everything goes, the back tests in this all went back from 2006 through February of 2012. And it was up about 10% the last time I looked, maybe a little bit more. So it's doing, these are doing fine out of sample. Okay, so having run through that probably way too fast because I have no feedback because I just see this screen of my own slides and I can't hear a thing. Okay, so I'm going to recap real quick and then we'll go to Q&A and good things will happen. So how to win Q6? You want to have lots of ideas. How do you have lots of ideas? You use a list. Scan, pause, idea, you code them up, you find your alpha, you submit your stuff, and magic happens. So I guess we're good. We're ready to go to QA here. This is my friend Brett was kind enough to write an introduction forward to the book, and the book you're about to read is far better than 101 trading ideas. It's 101 ways to develop trading ideas, and that's really important. Any list that you can use is going to help you generate ideas. Let me give you real quick before we go to Q&A. Let me just give you a list that I just found. If you're familiar with the Farnham Street blog, there's a list on there called mental models. So if you go to the Farnham Street blog and Farnham is FARNAMSTREETBLOG.com, Farnham Street blog, and you search for mental models, you'll get this list of 114 models, 114 ideas you can use, 114 models. Big list. You scan down the list. When you get to the pause, that's an idea. Make sure you ask yourself a question first. So what about crude oil? What about natural gas? What about whatever? But have your idea, have your question, and then scan down the list, and you'll and it'll present ideas to you, because that's what lists do. They generate ideas. Here's the contact info. Here's QuantiX address. Their idea code is at the address you see there. My email address is hcarstens@henrycarstens.com, and my book is at henrycarstens.com. 101 Trading Ideas, and it's available on Amazon in paperback and as a Kindle book. And I'd be happy to take questions now.
So maybe the simplest thing might be to just, if you have questions, just post them in the chat. And this is where the two of us will be able to see them. I hope so. Unless you need to go back, Henry, to your slides, if there are questions about your slides or related to your slides. It's a little unfortunate. I had the same problem that I could either see the slides or so in presentation mode or the Hangout. However, okay, here's our first question. There was another question. Let me get to that first, just to make it sure. The equity curves you showed, these were these the close? So the equity curves of the strategies. This was just the close, right?
This was just the close.
Okay, yeah. So just the close price.
Yeah, these are all daily. These are all daily strategies. So you buy on the close, and then there's an exit. So they're really rough draft. So there's no stops, there's no slippage, there's no commissions. This is just buy on the close and exit based on whatever the exit conditions are. Yeah, they're all daily data.
Okay, great. So then this is already answered. And it was, okay, here are a couple other questions. I couldn't hear if it was available on Kindle. I can answer that. I saw it's available on Kindle. I'm correct, right, Henry?
Yeah, it's available on Kindle and print.
Cool. So another question, do you consider behavioral economics when considering strategies, aka the psychology behind market behavior?
Yeah. Yeah, I think it's a fascinating, I think the S&Ps behave the way they behave because of psychology. And the closer the market is to the participants, so the S&Ps are very close to the participants, where crude oil is less close, right? So more psychology in the S&Ps or the Nasdaq than there or the DAX or whatever than there would be in crude oil or copper. Certainly.
Okay. Here's another question. Nate, what problems have you encountered when running through your list with a new asset class or a market you aren't as experienced with?
So that's what's so fascinating, right? So remember the story about crude oil. I couldn't solve it, and the list did the opposite of what you might, or it broke. I guess it broke me out it broke out ideas for me to solve a problem in a new market class, which is crude oil, because I don't really trade crude oil. And when I was trying to come up with a strategy for trading crude oil, I was basically using S&P strategies. So I'm using all my 20 years experience trading the S&Ps, and I'm getting nowhere. But I come up with, okay, let's go down the list and let's try some let's try some list ideas, and I get trade paths to the outcome. Okay, well that's interesting. That's a little different. And then I think the thing with the list is it forces you to get out of yourself. So if you're a new trader, it's going to give you new ideas. But if you're an old trader, it's going to give you new ideas too. So I actually thought the list was very helpful in trading new markets.
Okay. So let me check the next question. What kind of lists do you suggest, as Dean asking, strategies or asset classes?
Well, the list is very different. The list is very general. So remember, this is like the game of telephone. So you want a really general list. My list is very general. You saw the 10 ideas. The little snippet of it. The Farnham Street blog is phenomenally different because it's models, right? It doesn't really matter if you're trading if you're trading the asset class doesn't matter, right? ETFs, equities, stocks, futures, options, because you're just looking for ideas that you can go run through that little funnel that says, okay, here's an idea. Here's some trading. Here's a strategy. I'll code up the rules and I'll see how it does. Is that helpful?
I guess so. Yeah. Let me move on here. Brian is asking, what first steps would you suggest for a Python programmer who wants to become a quant?
I suggest the strategy or the Q6 competition is maybe a great way to do this. Pair up with somebody who's a quant and start running ideas. There are quants vary a little bit in how math heavy you want to be. So option quants are a little bit different than machine learning quants, who are different than simple quants who might just be counting people, where I just count this, that, and the other thing and see if anything interesting happens. So I don't know if I was a budding quant, I would get a list. I'll tell you what, I would go to I would go get my book. Sorry, this is a horrible thing. But in the book, because you want to start, you want to see what the strategies look like, right? And I haven't seen anybody else put out in a book working strategies that aren't flimsy, right? That don't break because they're so curve fit. So the 17 strategies in the book will give you an idea about various types of strategies. You code those up, you look at them, you get some experience. You're going to need 10,000 hours of experience. So you code up the first 17, you do some derivatives, you do that 1,000 times, and you're a quant. I don't know, but that it's kind of that. It takes a lot of it takes the ability to be naive, as well as the ability to pull in your experience. And as a programmer, you have a lot of experience because you got to code all these pieces, right? So you have a piece here, and you're like, okay, how do I implement Euclid's algorithm? And you probably code it up the first time, and it takes 2 screens full of code, and then you realize, oh no, that really I could do that all in about 7 lines of code if I really worked at it really hard. And that's what being a quant is. You got to start running those ideas down. Maybe pair up with an idea guy and just start coding, and then start reading and start making things a little bit better. Add your stops and stuff. It's all practice. Everything's all practice. Okay.
Here is an interesting question from Anirudh. What is your take on volatility-based trading ideas? Do you cover any volatility-based strategies in your book?
So if by volatility you mean VIX-based strategies, I don't specifically have any VIX strategies in the book. I use a lot of volatility measures, so I use average true range, and I use boxes to tell me if things are contracting or expanding. So there's some of that in the book, but as far as VIX strategies, I haven't coded up any of those. I know some guys who are doing some amazing things with VIX. One of the hedge fund guys I know just made like 20 or 30% on a VIX trade when this thing, a few days ago went ballistic. So. They're interesting. List works the same way, right? Scan, pause, idea. Just go down the list, be thinking about what do I want to do with VIX, and start coding them up.
Okay, next questions from Alexander. Do you often perform numerical optimization for variable parameters in a strategy when backtesting?
No. I try and do as little optimization as possible. And what you see in the strategies in the book, when you look at the rules, is you'll see, maybe I'm using a 9-day look back, and then I'll try and make sure I use, I try and vary that a little bit and use a 12. But optimizing curve fits, and that's one of the huge problems with using machine learning tools, is they really, really, really curve fit things, and markets change. And they're going to change right out underneath you. So you'll see, and I'm sure that Dirk's seen this, right? That as soon as you get to out of sample testing,
yeah,
your stuff breaks left and right. And the more rules you have, and the more optimization you do in those rules, the more likely it is to break, right? Let me give you one exception to that. The exception is if you have a strategy that, say, trades over, holds for 20 days, and you run an optimization that says, what happens if I hold from 1 to 20 days? So it checks holding 1 day, holding 5, holding 10, holding 12. If all of those work and are relatively statistic, and you see significance in all of them, that's probably a really, really good hint that you're onto something, right? If, on the other hand, you have a strategy that you say, well, I want to hold it for 20 days, and you go run your optimization, and it says that, yeah, it works on 20 days, but it doesn't work on anything else. It doesn't work on 10, it doesn't work on 19, it doesn't work on 17, then you got a problem.
I couldn't agree more with what you said beforehand when you said keep it simple. Basically, start with a pretty straightforward and simple idea and test that first, and see where you get. Because if there are not that many parameters, it's more stable and less prone to being overfit. Okay, so Sebastiano is asking a question: do you prefer futures or ETN commodities?
I'm a futures guy, so I always just do futures. But it doesn't, as far as ideas, it's whatever you want to do, right? You can generate the ideas that are in the book, and the ideas that you guys will come up with, either going through the Farnham list or my list or your own lists, those ideas will be generic. If you're an ETF guy, they'll work for ETFs. Doesn't matter. They don't care. Ideas don't care. You code them up the same.
Okay, next question from Moideen. Which have performed better in your experience, trend following or mean reversion strategies?
I think it depends a lot on what kind of guy you are. I started out as a momentum guy, where what I did was a long time ago, I took the OEX 100 and I would count up how many stocks in the OEX 100 are contracting and how many of them are expanding, and I'd put those two together, and if I got a good number, or a good pair of numbers, I'd say, hey, there's going to be a breakout tomorrow, and I'd trade an opening range breakout. Pure momentum, right? Then I ran into this guy called Dr. Victor Niederhofer, and if you haven't heard of him, he wrote a book called Education of a Speculator, which is an amazing book on our trade. He doesn't call himself a quant. He calls himself a countist, and he was a mentor to both Brett and I, a truly amazing man, but he switched me over from being a momentum guy to being a reversion guy. So there was another phase. So I was a momentum guy, then I was a reversion guy. Both of them work equally well, and now I'm kind of a circle guy, where my favorite things are always in the market strategies. So I got a whole bunch of new stuff that is just, hey, what happens when we have this, and then we reverse if we have the opposite of this and this, which are really fun. And there you go. So my answer is a complete hedge. I have no opinion. They all work.
Here's a great question from Sabit. Would you recommend a particular language? Oh, damn it. Now, wait a second. I lost it. I have to scroll back. Would you recommend a particular language for the kind of creative, again,
oh, no, I got
creative
it.
ideas? Yeah. Say Python, R, or MATLAB. That was the question.
It's whatever you work in, whatever you work best in. If I were, yeah, this will work. I do all of my work in TradeStation, and I've worked in TradeStation for years. Before that, a long time ago, I was a C programmer. I can't actually program in Python, but I really prefer to just the fast generation of ideas. So you should use whatever you can that makes it real easy for me. I've used TradeStation for about 20 years now. So it's really fast. I've built all of my own bells and whistles into it, and I can knock out ideas in that in minutes, where other people, where they have to go through, they have to go through their IT department and their programmers, they might take days or weeks. So I would say, especially if you, practice really wins with ideas and with trading systems. So if I would be, whatever's the fastest thing you can use, because if you can code, you can learn to code in Python in a day, and this, with the sample stuff that Dirk and Nobi have put up, you're gonna be able to move a strategy from whatever your favorite thing is, MATLAB or R or whatever. I do a lot of my data exploration in R. I do almost all of my testing in TradeStation.
Okay, here's another question from Adarsh. Do you use a lot of statistical analysis to determine relationships, or do you rely more on backtesting results? Great question.
Yeah, really good question. I use both. I think I think it's really good to use statistics, and they don't have to be fancy. I use z-scores to determine statistical significance. And I use R to look at things that are interesting to me. So I take a bunch of data and I go look at it, and I think about it, and then I code stuff up. So, but I think you've got to do. There was a I met a golfer a long time ago, a professional golfer, and he said the answers lie in the dirt. And what he meant is the answers lie in the practice range, right? You got to go hit a lot of golf balls to be a great golfer. Same thing. You really want to. You just want to practice. So you go look at data, then you practice looking at data, then you go practice, writing your systems.
Here's a question. So Steve, he arrived a little late. He's saying he's not sure if that was covered. His question is, are there any foundational concepts or base concepts to think about or memorize?
Are there? Let's see. I got to find his question.
Steve, maybe you can.
I'm sorry, I don't know if this is covered. Are there certain foundational concepts or base concepts to think about or memorize? My question, I guess, would be to try and simplify some of these complicated concepts. So what the easiest thing to do is just take one market and just start looking at it. What happens to my market after a big move? What happens to my market if there's the tail of a candlestick? What happens? So just start really simple and start counting and start looking at your results. And when you find something, keep it, but keep looking at how it does when you're done testing and have set it aside. I have a lot of strategies that I run live just to see how they're performing out of sample.
Okay, thanks. So Dan is asking, what's the biggest problem facing the quant industry today?
Oh, curve fitting and lack of ideas, right? Everybody's trading right now. Everybody's trading the same thing. So original ideas are hugely in demand. But curve fitting, because everybody's jumping on the big data, the big data machine learning bandwagon, there's a ton of curve fitting, and just in general, there's a ton of curve fitting. It's really hard to write strategies that work out of sample.
Okay. Ebi, what do you do when you win 10 times in your entire portfolio in a month? With an algorithmic strategy, do you change your algorithms?
No. So hard question, really harder than that flip answer of mine. So my background is that, and this is from Dr. Niederhofer, is, the market is like a casino, right? If you have an edge, keep trading your edge. If you don't have an edge, then you shouldn't be trading. So it might be more like, if I lose 10 times, will I turn my strategy off, right? Or is that a natural drawdown? But if I win 10 times, I'm just happy.
Okay. I would be happy too. Side note. Sue is asking, not really about the competition, that's fine, but I'm wondering how you use more qualitative data like news, annual reports, and so do you use what kind of machine learning statistical methods do you use to deal with that data?
I actually don't have any news strategies, and I don't do much with qualitative data. I do almost everything I do with price and relationships, but that doesn't mean that that just happens to be me, right? I know people who run new strategies, and they're very fun. You can do some machine learning stuff on them, obviously. Here's a really interesting, or an idea I've had for a long time, but I've never gotten around to following, is if you do natural language processing, speech recognition is actually looking ahead and predicting what the next thing you say will be. Well, if you took and recoded the markets into some sort of dialect. Then you could apply existing NLP, natural language processing, to that and predict what was going to happen in a market. As a matter of fact, there's a rumor that that Jim Simmons from Renaissance Technologies bought all the people from Microsoft's speech recognition group and brought them in-house. So really interesting stuff.
Okay. Yeah. Okay. Next question. Blimet is asking, what kind of software or tools would increase your productivity as a quant? Oh, that's a wide one. Okay.
Yeah, I don't. You know, what increases your productivity is not your tools. It's not your software. It's your practice, right? So I will generate more ideas and more strategies if I practice generating ideas every day. And getting back to the idea of the list, what a list will do for you is it will help you. So if you say, I'm going to create some strategies today, X number of strategies, let's say I'm going to create 10 strategies today, and you go down the list, you get your idea, you test it. You go test it. That practice, that continuous practice will make your ideas and your strategies so much better. Doesn't matter what your tools are. Use whatever you want to use. But practice is what will make you a great quant.
Here's another question from Sebastiano. How do you decide when to shut down your strategy that's not performing anymore?
Yeah, I used to have some really fancy stuff I did with chi-square distributions that would tell me when things were working and things weren't. I just really don't know how to answer that. It is a spectacular question, and I don't really know. It's kind of right now I use sort of a gut feel thing when things just don't feel right or don't work as well as they used to. But I'm not sure that's really a brilliant answer. There's some great statistics you can do about when stuff is getting out of bounds. I think maybe what's more important than when you shut stuff down is to try and figure out how you get your out of sample results to be as close as they can to your in sample results. And that sort of test, am I in an environment that was working for me in the past, really sort of helps you get out of that, do I shut this off now? I assume you're all familiar with Renaissance Technologies. The rumor is they've only shut their machines off 5 times, right? They just really let them run. So build great systems, have enough confidence in them that you can let them run, be Renaissance, or try and figure out when you're no longer in an environment that favors your strategy and turn it off. That was a great answer, just so you know. That was a great answer.
I couldn't agree more. Here's another question from Maldine. How do you approach risk management and position sizing quantitatively and systematically? And he says also, thanks so much, very insightful.
Yeah, it's really, it's an exceptionally, sort of personal, when you're trading your own accounts, it's a personal choice. When you're trading for other people, it's less a personal choice. When you're trading for Dirk, he will just tell you what you can trade, right? It's just, that's kind of the way it works. Personally, what I want to be able to trade through. I don't want to get scared out of trades, right? I want to be able. I don't want anything to scare me. Now, some people get less scared than others. Some people more scared. But I don't want to lose a good trade because I got scared. So the idea of trading small enough so that you don't get scared out of trades isn't a bad idea. Everybody now, and I'm sure that Dirk can attest to this, everybody now is looking for low drawdowns, right?
Yeah.
People want, a 4% drawdown or a 3% drawdown or a 1% drawdown. Well, the way you get a 1% drawdown is you just trade a lot of money against a low number of contracts or a low number of shares. I mean, it's not really hard to get the drawdown where you want it. It just your absolute return might not be as high because you've reduced your leverage. So I hope that's close.
Another great question from Nirud. When you look at commodity prices like crude oil, how do you factor in the dramatic changes in prices, especially if you take a sample size of the last 5 years or so? Do you take smaller sampling time or larger sampling time?
So what I do, and this is embarrassingly recent. Look at the if you're watching the British exit stuff, you see bonds going up and S&Ps going down now. I use average true range or standard deviation to help me with the volatility, so that everything looks. I try and make everything look the same to the strategy, right? So I might, when I look at that first strategy we talked about, where I say what happens after a big move in crude oil, and I'm looking for 5 standard deviation move, because I want it, so 5 standard deviations where a standard deviation is based on the last 9 days, because I want that big move to be relative to where volatility is.
Okay, I think we have time for maybe 2 more. Here, Ibai asks, how and when did you get into algorithmic trading?
I got into algorithmic trading a long time ago, and it's like 20 years. And what I wanted to do, I'd been a computer programmer. I was a general manager at a software company. Blah blah blah. But what I wanted to do is I wanted to build a little tiny machine that would go out into the world with a butterfly net, and it would bring back money. Right? And then I wanted to build another one, right? So I wanted all these little machines to go out every day and put up their butterfly nets and bring me back money. And to me, that was just the vision that got me. And then then my path happened to be really interesting, right? So I do, I start doing that. I'm writing strategies like the one I told you about, where I check the compression and expansion of the OEX 100. I decide if it's an opening range breakout. I'm trading that before I go to work in the morning, and then this weird thing happens, and I meet Dr. Niederhofer, and Dr. Niederhofer and I'm telling him about my strategy. I say, hey, I do this. And he says, well, that's stupid. And so then I learn a whole new way of doing stuff, which is way better, because it's, what I learned from Dr. Niederhofer is really spectacular, because it's scientific method, right? You count and you test and you count and you test. Are my results statistically significant? And if they are, I want to keep looking, and otherwise I want to keep testing. Right? So that's my.
Okay, here. So and that'll be the last question. Sorry, guys, we have to stop. So Ablimit is asking, what would compel you to actually apply the strategy on your own money? I'm referring to the confidence. Is it the C-score or backtest results or a combination of those?
It is. The Z-score gets me started, and then what I do is I very rigorously track my strategies. So I have a spreadsheet where I write down every single trade. I've done this from the beginning, and I just categorize the results. I count up the results, and as long as it's working, and it's working really well, then I'll trade that. It's kind of a flaky answer, but you get the idea, right? So the confidence is, so let me give you a concrete example, and not to keep people here too long, but I have a strategy now that trades bonds and the S&Ps and the 10-year notes, and I started looking at it in December, and by March I was like, wow, this is really interesting. This is doing okay. And so then I started trading it because the results had been good enough, and it made enough sense to me because it's based on some other stuff I had built. And it was really interesting because it was kind of based on that idea of how do I get from in sample to out of sample testing without something breaking. And it's been a fascinating sort of test. So you guys, if you want, I see there's a bunch of questions. I hope can you guys, that slide isn't still up of mine, is it, where it has, my email address is hcarstens@henrycarstens.com. If you want to send me questions, I'd be happy to try and answer them. If you guys are putting together teams for your, for Q6 and you need some ideas, if you want to invite me to your team and have me give you some ideas that you can code up, I'd be happy to do that for you. I've got like 1 billion of them. I'm not saying they're good. I'm not saying they'll win. I'm just saying I've got a lot of ideas. Okay, I'll be quiet.
Okay, so and I also just want to say thank you for attending. So for yeah, also for your great questions.
Yeah, great questions, really.
Yeah, I really hope you had fun and you learned something about creating trading strategies, and of course we hope to see you around competing in Q6. And if you have feedback like, hey, we would like to know more about this or that, or why don't you do a webinar on this, so just send me an email. It's Dirk, D-I-R-K, @QuantiX, and let me know what you think of what we just did, of this webinar, and what you would like to see in the future. That would be really great. You also can find my email address on quantix.com/about. And yeah, just shoot me something and I'll reply for sure. Okay, so thanks to all of you, and have a great evening. And thanks, of course, to Henry. It was a pleasure. It was so much fun.
It was fun. I really had a blast, so thank you very much.
Great, and thanks for the offer to help out with trading ideas. Okay, so everybody, nice evening, and hope to see you around soon.